Hello, NABJ family. I'm Kathy Chaney. I am with the Chicago Sun-Times. I'm one of the deputy managing editors, and I will be your moderator tonight for Taxes for Journalists. Everything that we all need to know. Some have filed their taxes, others haven't, including me. I'm always waiting to the last minute of filing an extension. So you need this webinar just like I do. So what we're going to do is we're going to have many questions that journalists may have when it's time to file. So we decided to pick the brain of a few who have mastered the process. I mean, really, really have mastered the process. And because April 15th is the deadline, or is it April 18th? We'll find out from our expert, Camari Ellis, what's going on. Follow this conversation on Twitter using the hashtags NABJ webinar and NABJ taxes. And let me introduce the panelists. First, we have Camari Ellis, an investments and tax advisor in Philadelphia. Thank you, Camari, for being on and giving us this free advice because, you know, we have many freelance.
Thank you for having me.
All of that stuff. Next, we have Adrienne Gibbs, a Chicago-based freelance journalist and editorial consultant. She writes regularly for Forbes, Pitchfork, and Netflix, and I'm so proud to call her a dear friend. We have Ernest Owens, writer-at-large at Philly Mag and CEO of Ernest Media Empire, LLC. Ernest is also the Media Institute Chair, LGBT Task Force Co-Chair, and Black Male Media Project Co-Chair.
Hi.
Next, we have Dorothy Tucker. She's the investigative reporter for CBS Chicago, and she's our National Vice President of Broadcast, and she's my big sister. So with all that said, let's get into the webinar. I'm going to throw it to Camari to let us know, first off, what big changes are we seeing with filing our taxes? What has happened this year that will impact us greatly from last tax season?
Ooh, I don't know where to start. There's so many. To start off, they eliminated personal exemptions. So when you claim your children, you don't get to write that off as easily as you did last year. They got rid of unreimbursed employee expenses. So I know a lot of people have questions about that. That is something that they got rid of this year as well. They got rid of, well, I shouldn't say they got rid of, but they made a major change to how you write off your personal state and local taxes along with your real estate taxes if you file a long form. They made some changes to mortgage interest, how much you can write off, and that's for the super rich as well. There are a lot of changes. They also changed the forms around. So everyone was saying that they were going to make it more simplified. Many people talked about being able to file on a credit card. None of that happened. They actually increased by 6 forms that you have in your regular filing now.
Wow. Okay. Now, before we get into the weeds of all the deductions that you can take and having Ernest and Adrienne and Dorothy jump in, most of us will be using the Form 1040. So for most of the freelancers and for those on staff who, you know, take freelance projects, are we adding the Schedule C with that?
Well, so everybody does a 1040, everybody across the board, all individuals. You only add the Schedule C if you are a freelancer or you are self-employed. Sometimes there are many of us who have LLCs, but they are the only member of that LLC or the only partner in that LLC. So you would also have to file a Schedule C as well.
Okay. And I need to get to this big question that all TV broadcasters get to. And this comes from Amanda Fitzpatrick, an anchor in Wilmington, North Carolina. She says, I have a really good accountant in the past year who explained that we cannot write off clothing or makeup or hair. As a journalist, I have to wear certain clothing, do my hair and makeup, but she says, so anyone that works in that professional setting. However, in cases where a company paid me to model their hair or an acting gig or to represent an event or product, I was able to write those things off under that. Can you tell us if we can write off clothing, hair, makeup, cable, etc., anything to do with being a news anchor? She goes on to say she goes to a lot of events, speaks for free on behalf of the station, chooses to drive her own car, gets a nice gown or dress, gets her hair done and makeup done professionally, And sometimes that costs up to $300 out of her own pocket that she's not reimbursed for. So how can she write that off? Is that something that's just not being able to be written off anymore?
So that account in North Carolina is actually very good. It gets a bit into the weeds when you look at it from an employee perspective versus a company perspective. And that's what she was talking about when she said she was modeling hair for various companies. So I'm almost certain, but this is a guess, that she is acting in the capacity of an independent contractor / a business owner when she's doing that. But no, you cannot write off wardrobe. Well, let me back up. You can write off wardrobe at times, but if you can do it, if you can wear it during regular outings outside of work, you can't write it off. There's been several cases about this. Yes, Dorothy.
What I was going to say is, let's say, for example, because, and while I agree with you, but I know there's someone that I work with, because what I did, I went around and I asked everybody the different things that, that they write off. And one of the ladies orders clothing. She's a morning anchor, and she orders clothing on a weekly basis from a company specifically for the job. They send her a dress. She wears that dress. She sends that dress back. I forget the name of the company, but they exist. It's kind of like that stitch and knit place where anybody could do it, but she does it, specifically for her job as a morning anchor. And I think it sounds to me that should be something that she can write off, because that is just for the job that she performs on air. Would you let her write that off?
Well, don't put it on me. It's not me.
Okay.
I'm not Congress. Congress writes all tax law. So Congress writes tax law, IRS interprets it and enforces it. So sadly, again, you're not allowed to write off wardrobe that you can wear outside regular everyday clothing. Now, but when you are a business owner, right, and let's say I'm going to hire an anchor broadcaster to model something for my business, let's say I sell wigs or something like that, then yes, I can write that off. If they're being paid as a 1099 and they have to buy something specifically for that event, they can write that off because it's considered ordinary and necessary as a part of business to be done. Same thing for people that do plays, right? So if you have a mermaid costume, you can't wear that outside, right? You're not going to wear that during regular hours when you're going out, even if you're hanging out with your friends at a bar or going to a gala. So no, you can't write those things off.
So if I'm asked to MC an event and I buy a dress for that particular event, I can then write that off.
You could wear that dress, though, as regular everyday attire, though.
Kathy, he's killing me.
And it's not me.
But
listen, I printed out a whole case study here from the U.S. Tax Court where a young man who worked for Polo, he had to wear Polo clothing. He wrote it off on his tax return, and the tax court struck it down. So listen, it's not me. Don't be mad at me. Don't kill me. Don't kill the messenger. I'm just telling you what the law of the land is.
I'm going to throw it back to Kathy because I've got a few more things that you're probably going to shoot down, but I'm going to try them anyway.
So what if, let's say, the TV people are required to buy stuff with the company's logo on it? Can they write that off? Because the company is not purchasing it for them, but they're saying you're required to, wear this jacket or wear this shirt at specific outings, but it has their logo on it. Can they write that off?
So prior to 2008, before the Tax Cuts and Jobs Act, you could write it off. You cannot write it off any longer because that will be considered an unreimbursed job expense.
Jesus. Okay. Now, I got maybe a good one that could
Blame your president.
Okay.
Elections matter.
Yes, they do.
Nice way to throw that in there, Ernest. Okay. So what about, let's say, meteorologists? They're about outside part of the time for their work. Can they write off like sunscreens, sunglasses, visors as part of their job? No.
And they're an employee, correct?
Yes.
No.
All right,
Now,
I
listen,
got
there's a lot of people out there that will do a lot of things. I just tend to be one of those. I tell people all the time I don't look good in orange jumpsuits nor black and white jumpsuits. People go to jail for things like this.
All right, Amanda, Dorothy, the rest of our broadcast family.
Okay, so
tried.
I got another one. So
Okay.
a sports anchor, you know, in order for him to do his job, he has to be on top of everything. So he's got to watch basketball, football, and all of that all day long. So he's at home, he's watching all of the stuff. Can he write off a portion of his cable?
Is he an employee or a freelancer?
Well, you know, I'm going to let you answer that question both ways.
So as an employee, no. You could do it prior to 2018, prior to last year. But again, they walked back all unemployed reimbursed. Excuse me, y'all. They took back all unreimbursed employee expenses. So that will be considered one of those things. Now, on the state level, here's a little relief. On many of the states, you can write that off. I'm in Pennsylvania. We can write that off in Pennsylvania. But, you know, at the federal level, because, you know, you have to think about taxes from a federal, which is the IRS level, state level, and local level many times. A lot of times the state will allow you to do it, but the federal won't. But you got to coordinate all of them. From a business owner standpoint or a freelancer standpoint, yes, you could write off your internet. You could write off, actually, if you have a home office, you could write off a lot of things, right? You could write off your rent. You could write off your home mortgage. You could write off, well, listen, the tax code will always be in favor of two people, business owners and investors. So
let's talk about it.
The country was founded. The country was founded by business owners. I tell people that all the time. The true gateway to wealth is through taxes or minimizing taxes. So you must always try to think through the lens of being a business owner or an investor, especially a real estate investor. But yes, you could, again, to answer your question, you could write off a portion of your cable if you used it for your business, especially if you had a home-based business or if you work from home, rather.
So if you work from home, you're a freelancer, and even if you're not a freelancer, you have a home office, what percentage can you write off because you're using that home office or that space designated as your home office for work all the time?
So there's two methods. There's the safe harbor method, which I'd rarely use. I think they give you $5 per square foot up to a certain space. But what I normally do is I'll have one of my clients give me the total square footage of their home, and then we'll figure out the total square footage of their workspace. And so just for an example, for easy math, let's say it's a home that's 1,000 square feet and your office is 100 square feet. So you're using roughly 10% of your home in the service of your business. So you get to write off 10% of all your bills, your utilities, your cable, your rent or your mortgage, your real estate tax, things like that. And actually, that's one of the ways to kind of get around this whole reduction in real estate tax for regular individuals as well.
Okay. It looks like we have a couple of questions from the audience.
And what about the freelancers and the writers? You know,
the freelance.
Some of us not on TV. You know,
well, I'm lumping y'all all together. I'm lumping you all together.
I know.
But I mean, I'll just kind of jump in as a person who used to be on staff at newspapers and now works for myself. Now that the tax law has changed and you cannot write off your HBO and things like that, those people who are out there who cover entertainment, who cover sports, you have to watch the Oscars or whatever you have to do with TV and things like that. You should really go back to your bosses and ask them to reimburse you more for it. That is a conversation that has to happen now because you need to get fully reimbursed for everything that you're doing at work, because it used to be that you could take those write-offs. Now that you can't, get to talking to your bosses and maybe team up with a bunch of people, go to HR and see what you can figure out. And I know one of the things that they didn't change, correct me if I'm wrong, about employees is that the mileage. Now I think you get like 54 cents per mile, right? Even if you're an employee. So whatever your job reimburses you to drive around and cover all these crimes, who got shot, they probably give you like 30 cents a mile. Make sure that when you go to your tax preparer, that you take the remainder of what the government gives you. I found over the years that that's, if you're like a crime reporter and you're driving every money, and so you should just definitely get your mileage back, because that, I think that's huge. But am I right, Mr. Camari?
Mileage will be considered for employees. Mileage will be considered an unreimbursed employee expense. So they got rid of that as well.
But even
What? No more mileage?
I think to your original point, Adrienne, no, you're going to have to push back on your employers to get them to do more reimbursement and be more aggressive with their reimbursements.
That makes sense.
And just for the record, mileage this year is 54.5 cents. So every little bit counts.
Ernest.
Yes.
So what are some deductions that you have taken that you were surprised that you could take?
Yes. So for me, I have a personal LLC, Ernest Media Empire LLC. I don't work full-time for any media company. I secure contracts and retainer contracts with various publications, both locally and nationally. And this all gets sent to my LLC, which is my limited liability company. Pretty much what I've learned is that a lot of things that I use to get to and from to do what I have to do for my freelance job, including I do a lot of live tweeting and coverage of awards for my freelance opportunities. I can write off my my Wi-Fi and cable. Also the laptop that I pay for to do my work on, I can write off my laptop, my cell phone bill if I'm doing a lot of interviews and doing a lot of work that has to basically do my job, I can write off my cell phone bill. As far as travel goes, if I'm taking Uber and I have a business account and I'm using the Uber to get to a location, I can also expense my Uber trips or SEPTA passes if I'm using it for work purposes. Also conferences and travel. So I pay a lot of my conference fees, my air flight and my hotel. All of those things get expensive if I'm using it for work purposes. And for me as an entrepreneur, I don't have a company that I have to refer to except for myself. So for me, all of these various things that I have to expend to do the work that I do, I save my receipts. Creating an LLC helped me create a business account. So all of those expenses go through the business account, which is separate from my personal account. And I also save receipts and invoices as well to do that. Now, there was someone in the question, a freelance writer named Michael, who had asked a question about how much percentage should we be taking off per piece or project. Personally, now I know Camari may say something differently, but if you are on retainer for a company at a certain time, if you have an LLC, quarterly payments are better. Trying to do it tit for tat might be a little bit difficult. And also too, quarterly payments are smart if you have an LLC. If you have a business altogether, it's really going to probably be hard for you to set aside those amounts one by one. So you'll just have to wait till the end of the year if you don't have an LLC to see how much you're going to have to owe. But I'll leave that to Camari for certain clarification details.
So if you file a Schedule C or you're an if you're basically a sole proprietor or you're an LLC, you do need to file quarterly payments like Ernest just said. What I normally recommend to people though is that they pay monthly. Reason being is most people do not have the discipline to do that, or at least in my experience, people don't have the discipline to hold that money and send it on a quarterly basis. So I try to get it out of their hands as fast as possible. So again, it's LLC, or if you don't have an LLC, if you're doing a business as a sole proprietor, which is basically yourself using your social security number, because you can't do that. You can't be a business owner using your social security number. You still have the responsibility to make those estimated payments.
Okay, so I'm going to ask for those freelancers, because we have per diem reporters at the station, like many stations do. So for those who are per diem, if they are per diem, that means like everybody, like other freelancers, they can write off everything.
Yeah, most people
Pretty much.
If they're per diem, okay. So what if for the freelance broadcasters, what if they're an MMJ and the station will provide them with a camera, but let's say they buy their own microphone, an extended microphone, or they buy the light, or for some of them, they're using their own iPhones and they're using a lot of the equipment that, will amplify their pictures and stuff on the iPhone. Can they write off all of that equipment?
Yes.
Uh-oh.
That's what I do all day.
I do want to say something about.
I'm going to let Camari be the expert on this one, Ernest. Okay, let's see what the tax man says.
No, just about everything Ernest said is dead on. I do want to make a small caveat, right? Because all of the stuff is very nuanced. So if you paint with a broad stroke, you can get people in trouble. Your cell phone bill. If you make personal calls on your cell phone bill, I would suggest you not write off 100% of your cell phone bill. Try to figure out what percentage of your cell phone use for business or personal, or get a totally separate line and phone for your business. But again, if you have one phone and it's doing double duty, try to figure out if you use it 50% of the time for personal and 50% of the time for business, or write off that 50% of the time for business on your taxes. Don't write off 100%. That's a known red flag that will get you in a lot of trouble.
But your equipment that attaches to your cell phone?
Yeah, you can write that off. Yes.
Okay. So let me ask this question from Vicki Thomas. What changes this year as it relates to charitable deductions, especially clothing?
Nothing changed, but what I will say is a lot of times people will get receipts from the Goodwill that have no fair market value written on them, and people will determine what they are on their own. Matter of fact, that case I was telling you about, he got in trouble for that too. You need to try to get whatever agency, whether it's the Goodwill, Salvation Army, whoever you're donating the clothes or vehicles or items to get them to determine what the fair market value is and have them document it on their sheet. Same thing for church. Make sure that, your tithing report, make sure you get that and have that as records as well.
Okay. And another question, Amanda Fitzpatrick, she wants to know, since, all the on-air people just can't write off nothing, is there anything that they can write off?
That's a good question.
Every situation is different, right? So I don't know if many of the broadcast folks are freelance or if they are employees, but if you're an employee, I'm gonna assume many of you are employees. You can go about doing your tax return kind of similar to what you did last year. If you're married, you and your spouse should file together. You get to write off your home, your mortgage interest on your home. You get to write off your real estate taxes. You get to write off your state and local taxes. Like I said, this year they are capping that at $10,000. So they're making it a bit more difficult for some folks. They did lower the tax rates for many employees. So that's something you got to be careful about, because you're seeing a lot of people complaining about their tax refund being lower. That's because they took out less money during the year.
But come on. If I were not on television, I would probably not wear makeup 5 days a week.
Ms. Dorothy, I disagree with that. You probably still wear makeup.
All right. How about this one? What about my iPad? Okay. I literally bought the iPad just to make life easier for work. And the only reason I pay for cable television, otherwise I'd do the ear thing, is because, I need to get the signals in it. I need to watch the news to find out what's going on in the morning before I go to work. Can I write off a portion of cable? And can I write off the iPad? Because I really did only buy it for the job.
If you are self-employed, freelancer, an LLC like Ernest, you can do all of that.
Well, here's the thing, though. If I can finally, I think I got a little stable. Here's the thing, because I have an LLC, ASG LLC, and I'm gonna tell you, one of my editors at the Chicago Sun-Times gave me amazing advice when I was still working at the Chicago Sun-Times, and she said, "Aren't you freelancing for Essence and for all these other people on the side? I said, yeah. She said, you need to get an LLC. It's only going to cost you whatever it was at that time, like $200 or something like that. And she was like, just get it and put everything into it. Trust me on this. Always keep an LLC on the side. You pay for it, one and done. And I think this is why so many of us freelance as you're hosting events freelance, you're writing articles freelance, you're getting on radio shows freelance, you're doing all these things freelance. You could find a reason to start yourself an LLC. And then when you start to do these things, you throw everything into your LLC. And here's the thing, businesses don't often make a ton of money, not for the first 5 years anyway. You're going to take some losses, and that's okay. But especially if you already are like a regular employee somewhere. I mean, I split it. I have an LLC, and then when I was working for someone, that income went to my tax ID number for that LLC, and I still had income from my job. And then you go to a tax preparer, and they, make it all work when you put things together. But it's not all is lost, even though the tax code has changed. I think more of us should probably invest in an LLC than we think. I know a lot of people say, I don't want to do that. I just want to be a pass-through entity, not pass-through. I just want to do everything on my own and have them pay me. But the other thing is, if you get your LLC, then you get your tax ID number, and you don't have to keep giving random strangers your Social Security number. You can do that. Uh-oh, I hear a kid.
So
you're 1,000% correct, Adrienne. You're 1,000% correct.
Thank you. Okay.
I know I have clients who, we might call it a side hustle or freelancing, where they have a 9-to-5 job. Matter of fact, I have a doctor like that. She has her 9-to-5 job, but she does a call on the weekend. Same scenario as many of you that are in broadcast and media. If you have something you're doing on the side, writing a piece or maybe doing some reporting, like you said, you can throw your iPad under there. You can throw your travel under there. You can throw mileage under there. You can do a lot. You just have to be creative and do a very good job with your bookkeeping as well.
Yeah, I mean, for me, that's exactly why I did it personally, because it was frustrating when I wasn't having an LLC trying to account for everything, because, I had to keep giving my Social Security number out on every form I had. I also did not have a way to separate my personal expenses from the business expenses. So when I was doing freelance work with our LLC, everything was going through my personal bank account. And so when trying to maneuver that during tax season, it was a headache. So when I got an LLC, I was able to have a business account set up separately from my personal account. And I was able to then track my expenses, and that when tax seasons come, I can now be able to see everything that I spent on that business account are all tax deductible, with the exception of me paying myself out. But other than that, if I'm disciplined where I use my my business account debit card to purchase things specific for my business. And so I'm able to keep a tracker on those expenses. And it gives me joy when I can pay for my NABJ registration through my business account and be able to turn around and be like, woo, or that $1,000 for that hotel, okay, and be able to say, woo, that's all going to help me at the end of it. And so it's a good way to track your expenses just personally and give you ability to see the difference, and also be able to not give out your personal business as much as possible, but also a way to legitimize what you do too. When I got an LLC, I got more clients and I got more business because people, did not like always having to give me a W-9 or all these other forms. They saw the company stuff and they were like, okay, you're serious about this. It's more legitimate. So sometimes the LLC can also help legitimize, the way that you operate with speaking engagements, everything else.
Absolutely.
I'm sorry, let me get this question in from Vicky. Can you write off speaker fees that are not reimbursed by your employer? Someone told me you could do that someone told me that you could do it as a charitable donation.
If they're willing to give you a charitable receipt, yes.
Okay.
I wouldn't do it if they don't give you a receipt. It's too hard to do. But normally you can't write off volunteer. What you can write off, you can't write off volunteer hours. What you can do though, you can write off the mileage. Especially if you're itemizing your deductions, you can write off the mileage.
So if they were going to give me a $500 honorarium, I couldn't say, okay, I can't take that, but give me a receipt that says I just made a $500 charitable contribution to your organization, and then I can write that off in my taxes?
If they're giving you a $500 honorarium, I would take the honorarium and then write them a check or via your credit card, make the purchase through to the nonprofit that way. So then it's a clean transaction. But I thought they were trying to get it in lieu of a payment. So
no, I was trying to figure out how to get it off my taxes. I like that.
Right. Yeah. So you can turn around and just, give it right back, and then it'll be a write-off.
And then it's the write-off. Oh, I like that. Okay.
But you still have to report it as income.
What? But I just gave it away.
You did, but it's still income.
It starts to add up, doesn't it? You know what I mean? Like,
it all adds up.
So what if I had an LLC like Adrienne in earnest?
So if you had an LLC, you would have that nonprofit make the check out to the LLC, and you could still write them a check personally. LLCs cannot write off charitable contributions. You would have to be a C Corp to do that. But you could still write it off personally, and it would still help. Potentially, it would still help.
Wait a minute. So, Adrienne, I'm an LLC. I write them up. They give me $500. I give them a check for $500. As an LLC, I can write that off.
No, you cannot give you can't give the LLC through your LLC account. LLCs cannot give charitable donations. You can only do that if you're a C Corp, but none of us are going to go that far deep. So you cannot give it as LLC. Now, to be honest, if you had an LLC, just take that $500 and do your thing, because you'll be able to write off other stuff without needing to worry about that if you was an LLC. So I wouldn't even sweat it. Just get your coin, and then the other stuff that you did to get there, like your travel to get there, and if you had to pay money to get there, you can write all that off if you had an LLC. So I wouldn't put too much on that $500. I just keep the money.
Yeah. I mean, quite honestly, as a journalist, that's a tough one anyway. You really can't accept that money because you could be covering them next week. So you got to be very careful with that anyway. So I just thought I'd ask for. All right.
Now, Michael Butler asked a question that I don't think we thoroughly addressed. He asked how much money we should take out for taxes, and I get that question a lot. So what I normally tell people is to take a third. So let's say you got $1,000, take a third of that, which is $333. Put that on your taxes. Keep a third for yourself, Ernest. And keep a third in your company. So it's a third, a third.
Nah.
That's the way you
okay, so this is the thing. If you I don't do that, and I'm bad, and my tax person is on this Zoom, so I just wait. For me, I personally, if you're getting a reoccurring amount of money, like if you're, so I know Mike a little bit, Mike. So hey, welcome. I know if you're getting a reoccurring, like a type of reoccurring payment from that publication, just make sure that maybe mentally save up, or just know with them quarterly payments. So when they're due, like let's say in March, you got one in June, you got one in October, you got one in December, or whatever. Just note that you already do your advanced calculation of that. So for example, let's say you're getting paid $2,000 a month from said publication. You already know that each quarter it's going to be $6,000 you're making. So then what you can do is say, okay, I'll take a third, 2,000, just knowing your head coming in the gate, I'm going to owe 2,000 in the quarter. Rather than going piece by piece, tat for tat, just know at the end of what your end goal is, and maybe whatever money you make from speaking engagement, whatever, you can use to pay up in advance in that quarterly payment. So there's all types of ways you can do it. Everybody's different. For me, I kind of do guesstimations, and sometimes it's okay to do over guesstimations, because if you do more in your quarterly and you pay more than what you do, then you get a refund. And so that's also a cool thing that people think. Like, people who have LLCs can get refunds if you are being more generous in paying upfront in taxes. Most people don't do that, but some people do, where you pay more than you're estimated, and then you get a refund at the back end when your taxes are due, officially.
And
Let me
also as
ask
a freelancer,
Oh, go ahead, Adrienne.
I say sometimes, sometimes some of the contracts I get are interesting because, some of them aren't contracts. They want you to be an employee for 3 months, right? They do interesting things. And I used to get really upset about that. But what I have learned is sometimes it can be beneficial to be your employee for 3 months. That you treat basically like a freelancer, but for some reason I'm on your tax roll. That's kind of dope because they pay the taxes. And usually, depending upon, how many exemptions I take, I let them take out a bunch because I already know that I've got to pay my quarterly taxes. That doesn't always work, all the time. But some of our contracts are, the companies get hinky and they want you to be a employee. Rather than fight them on the employee status, I let it go and let them pay the taxes, let them pay in Social Security for me. Sometimes that works out with certain places that I work with, sometimes it doesn't. And I know like sometimes my tax preparer gets annoyed at that. Like, why do you have all these damn, this doesn't make any sense. All these 1099s plus W-2s plus this, plus that. But I'm not going to fight these big corporations over how they want to classify me because at the end of the year coming, I don't owe a lot because they pay it.
Right. And also, too, to add on to that, I know this hasn't been brought up, but this has happened with me where you get situations like mixed income, which I think Adrienne's talking about a little bit, where I might get a teaching gig and I'll teach during the summer. And like I taught at Penn for the summer and I'll be there for like 3 months. But they will have me on a part-time gig on a W-2 situation where they heavily tax out my money. And so sometimes the good thing about that is that if I was to get a refund in my pool, whatever that tax they owe me, that refund money that I would have had goes into the larger pool to help me not have to pay certain taxes. So I use some of that W-2 money, which sometimes is not that much, but it helps cut off of some of the taxes I already am due. So that's also one thing to consider because they've already paid it off. And then some of that refund money, AKA that if you have a W-2 job and you don't have any prior debt, then you're going to expect a refund. For me, I use that W-2 money, that refund money, to then cover taxes that I do owe through my LLC from that untaxable income if I didn't make quarterly payments or whatnot. So that's like a mix, because some of us do get mixed income where, like you said, companies will give you a W-2 situation, and then some companies will accept your LLC, and so you're going back and forth, and sometimes that is good because some of that extra money that you're supposed to, that's been withheld, can then help pay off some of the stuff that you need to pay otherwise. So that's where my head is at, and I think that's something to also consider. It's not going to always sometimes be strictly LLC or strictly full-time for all of us, so hustle where you can.
Okay, I've got two questions. One is car maintenance. Can freelancers, it feels like you're going to say that if you're not a freelancer, you can't do it. But oil changes, tire replacement, can we write any of that off?
You're a freelancer or LLC or on business for yourself. So, I mean, but I hope I'm saying your name right. Adrienne kind of gave us a solution for that, right? So if you are a freelancer and you work a W-2 job or regular 9-to-5 job, you can do two things, right? You can take your actual expenses for your automobile that you use in service for business, or you can do mileage. So mileage this year is 54.5 cents per mile. But if you keep a good track of that, will go better with following their mileage.
Here's one of the big things. You got something to say, Dorothy?
Well, I was just going to ask, I'm going to try one more thing. What if, Camari, I bought an app to help, download something or dictate something or translate something, and I paid a few bucks for it. Can I write that off? Because the only reason I bought the app was just, again, to make the TV job a little easier.
So how are you classified? What are you?
We just need to get LLCs. LLCs all around.
That's it.
Like Nicki Minaj said, get an LLC.
Yeah.
I will say this. LLCs are great. They're not for everybody, though. Sometimes.
I mean,
if you do a lot of work, go ahead. I'm sorry, Dorothy.
Well, no. Okay. So like I do a radio show and that is, that's at a different station. Yeah, it's freelance. I've been doing it for years and never wrote off a dadgum thing. I should have been LLC all these years. Aren't you telling me?
Yes. You should have got an LLC, Dorothy.
Can I go back?
My gig.
Can I go back?
Well,
You say,
Yeah,
hey,
actually,
I mean, I learned that the hard way.
actually, you can't go back.
how long?
How long have you been doing it?
Oh, good 8 years.
And they pay you?
No, they don't pay me a penny.
They don't pay you a penny, but you do it to promote your business.
I do it. Yeah, I do it to, yeah.
Yeah, you can go back. I would go back maybe 3 years, 3 or 4 years. You can go back. You can do what's called an amended return.
Oh.
Hey, okay.
Hey, we've arrived somewhere.
Exactly.
Side hustles that.
But you heard the
for a long
caveat.
time.
Right? The caveat was you do it to promote your business.
Oh.
Oh, wait a minute. No, I do it to promote.
But we'll talk offline.
Okay, fine.
That's
So, health insurance for the self-employed. Is there a deduction for health insurance for the self-employed?
Yes,
yeah.
but it's still written off as a personal expense on your Schedule A. Sorry to be super technical, but yes.
Okay. Now, I did get a question offline about some freelancers who have taken assignments that are abroad, but they're here.
Mm-hmm.
How do you navigate that?
What are you worried about? Foreign tax reporting?
Right.
I am not the expert on that, but as long as the agency or the company is U.S. based, they shouldn't have to worry about any other overseas filings. But that could change depending upon how long they are. Let's say if somebody's in Africa or Egypt or Israel covering something, that could change depending upon how long they're there.
Okay.
So I would have to do more research in that. I don't want to guess on that. That's too important.
Okay. What about business meals? So let's just say the four of us are going out for dinner and we just happen to start talking shop, and one of us pays the bill. Can we put that on a receipt like, okay, we had a business dinner? Or
So here's the funny thing, right? So with the new tax bill, they originally said they were doing away with that. And then they said they were going to bring it back, but it's kind of in limbo. So what I would say, yes, you get to write off 50% of the bill. What I would advise everybody to do if they go out for a meal is to document that meal. Document what it's for, who it's with, what was the business purpose of that meal. A lot of people try to take everybody out, and do birthday dinners for their children, and that's not necessarily. I'm serious. Some of the things.
Okay. So I have a question.
Business expense.
So we've talked about this, and I'm just going to put this out for everybody else to hear because I am still debating this. So there's this conversation around entertaining people, if you have a business clients or entertaining people. So that might be you have a person that you think might be a good speaker for a deal that you're doing as part of your business. And let's say you took them out to lunch to discuss that. Or let's do a better one. I am a food critic. In my private
Everybody knows you love food, Ernest.
I love food. So, people see me go out to certain restaurants. Now, sometimes I go to these restaurants and the restaurants will cover the food if I'm tasting it. But sometimes I do my own incognito critiques or whatever. I did a big piece called Dining While Black last summer, and I referenced some of these restaurants and I ate there and it helped me tell that story. Can I write off the bill for those meals that I had that was that told those stories?
The comp meal or the meal you paid for, the incognito?
The meal I paid for. That was a part of that story.
You can write off 50% of that meal.
Hallelujah. Say no more. Say no more. And does that matter? Now, does that matter if said meal was used on my business card? Because sometimes I didn't use my business card. Does it matter if I have the receipts on the personal account? Does that help?
Yes, receipts always help, whether you do it business or personal.
Say no more. Say no more.
suggesting it is.
I mean, if anybody follows Ernest's IG feed and stories, you see the man is about his food.
Okay. I need to
And
start
social
doing
media helps with that documentation because it's documentation. I mean, it's
Yes. Put your
documentation.
receipts online.
I mean, that's a great point because
you were there, you did this, you did that. You clearly write this, you clearly write that. You know, being social can work out sometimes. You know,
because
in
tax
that
authorities do use social to investigate people. So,
And also, too, the other part someone wanted to add is about movies. Someone had texted me this actually while I was on the phone. Movies. Let's say they're a movie critic and they're paying for movie tickets. They have an LLC. That's important. They do have an LLC. They do movie critics and they do stuff. They contribute to radio shows and whatnot. Those movie tickets, if they go to concerts and they're writing reviews and they're coming out their pocket do as a freelancer, what is the situation with the concert or movie tickets if they're doing that?
So the IRS rule that they go by is that anything that is ordinary and necessary to conduct business, right? So I'm assuming you said LLC, so I'm sorry. Anything that's normal, ordinary, and necessary to conduct business, that's how the IRS looks at it. So if they are a movie critic, an entertainment writer, anything like that, they could write off any of those tickets and expenses they incurred doing their business.
So would that be considered could that be considered like a situation like, not an LLC, like, would that be 50% off or would that be the full price? Because I know with food, you said 50% off.
But you know what? But now I'm thinking through it. There might be a case to get 100% write-off. You just need to have full documentation. So, I mean, sometimes you have to fight or you have to be ready to fight. Because the IRS doesn't get everything right. But again, as long as you're going by the law, you have a fighting chance to win that battle. And so I think I would want to research it, but I'm almost certain that you could probably write off 100% of that food bill for when you're writing the stories. Not when you're taking people out for business dinners, but when you're actually in the commission of a writer doing research, and out there eating your lamb chops and everything like that.
There you go. Say no more. I'm happy. I'm good.
Okay, so Rashawn has a question. Can I write off mileage for my W-2 and 1099 work? If so, how does it work? Is it round trip from my house to the stadium of the game I'm doing?
So you're asking me two things. You're asking me if you're an employee and a freelancer or, self-employed. So you can write off your mileage under your 1099 work because you're a business owner. It can be round trip from, I'm assuming that you have your home base is your base of operations. If it's not and you're doing commuter miles, then you have to do it from the place where you're commuting from. But normally for this conversation, let's say round trip from your home.
So I've got a non-journalist question, kind of, and maybe it applies to some people. So I am at one point I was taking care of my aunt in New York, and she passed away. So now I have to see about the estate. What can I write off connected with, caring for? Could I have written off anything when I was her primary caretaker, and now that I am the executor of the estate? What can I write off in reference to, if anything, when I have to go to New York and take care of that?
So those are two different things.
Okay.
When she was living, you could have claimed her as one of your dependents as long as you provided 51% of the care for her.
Okay.
Just as a caveat, a lot of people don't think about this. When people die, you do have to do a final tax return for them.
Right.
Oftentimes. So that's a separate thing that you need to do. And regarding her estate, you said she's in New York, so I'm assuming that New York, and I don't know, her estate level, right? But you would probably have to file some type of inheritance / estate tax for her to resolve her estate.
But can I go, like sometimes I have to go to New York to see about the property until it's sold.
So you would get to write that off on her estate / inheritance tax.
So I can't write it off on my taxes. I have to write it off once It sells once the probate sells or something.
That is correct.
Okay, I didn't know I could actually write any of it off.
Now every state is different. So in
Okay.
Pennsylvania, that's the rule. But I'm willing to bet dollars of donuts that's the rule in New York as well.
In New York City.
Yeah.
Okay.
Okay, so I have one last question for Camari, and then I have one last question for the other three. So Camari, I'll start with you. What is the worst mistake that you've seen from others when it came time to them getting their taxes done?
I don't know. Buying children. Y'all laugh. I've literally had people come and try to physically accost me over that. That's the worst thing. One thing that's really bad is people like to use their last pay stub to do their taxes with. A lot of times everybody's in a rush to try to get their refund. Problem with that is your company may have not reconciled and tallied up all the expenses that are attributed to you and you working there. Sometimes some fringe benefits or some 401k benefits might not be tallied up properly, or healthcare benefits. So it's just always better to wait to get your actual W-2. A lot of the big box tax shops promote that a lot. I always think that that's a mistake.
That was good. Okay, so for the other three, what programs and apps do you use to keep track of your deductible expenses?
I like Wave.
Adrienne, can you repeat that because you froze a little bit? And she's still frozen.
I'm sorry about that. I'm still frozen. Okay.
No, you're
I'll
good.
hold off.
No.
I'll say I like Wave app. I like Expensify. Those are all pretty good, and I like those apps that let you take a picture of your receipts and then you can just file it into your phone. Those are always great too, and then you can just pull them up later. And a plain old Excel spreadsheet. I will put everything I do weekly into an Excel spreadsheet, and then it's all good to go for the end of the year.
Ernest?
Well, I guess I definitely could do a lot better in that department. But one of the things that I have specifically done is that don't underestimate the power of an app. So whatever your bank account app is, don't underestimate that. So for example, I'm with Bank of America. I have the Bank of America app. I keep an eye on stuff, making sure I don't have overdraft fees. I make sure I deposit my checks. You can deposit your checks by phone. And so you can take a picture of a check, make sure that it goes to the right bank account and deposit. Also to not just apps and devices, but make sure you get a financial advisor of some sort, a good coach, whether you're someone you know in your local area, talk to your bank. They can help organize things for you a little bit better if you're first starting your LLC, and also get a third party, get someone else also outside of your bank, because banks can also try it. So I would say, those are my things. I mean, like I said, there's some apps. I know the QuickBooks. There's a QuickBook app that is very helpful that I know a lot of people, a lot of freelancers use. But also for people who really don't like all the apps, and, apps can always, let you down sometimes. Do not underestimate the power of actually showing your receipts, keeping documents, and actually having conversations with face-to-face with people. So like I said, talk to your bank. To keep track with your financial goals and making sure that money's coming in and out, making sure things are going to the right accounts and making sure the checks are actually being deposited in the right places. And also, like I said, get a financial consultant or somebody who can also coach with your taxes before you have to file your taxes, so that you're consistently having dialogue about anything that you might owe or whatever, so that there's no big surprises during tax season. So this tax season, I'm excited because I just found out that I can now write off my fees. So I'm even feeling a lot better. So this has been a great webinar for me as a panelist, and I hope this has been good for other people too. But yeah.
I've learned a lot here tonight. I think probably the biggest thing that I do, not repeating anything that anybody else did, because you're right, the spreadsheets, the different tools. I have a separate credit card that I use strictly for things that I think are tax write-offs. And I try not to use that credit card for anything else, so that it becomes very easy for me. And probably about once a month, I look at all my credit cards to see if there's anything suspicious on those credit cards, to make sure that nobody's using it, that I'm not a victim of fraud, that nothing's been charged double, or I actually go through everything. And then at that same time, I go through and I print out all the Uber charges and anything I have. I put it on paper as well. So I have, I'm old fashioned. I still want the backup, and I just have a little file on the side just for the paper receipts, just in case. But I also keep everything on that credit card. So, what I find is that at the end of the year, there are little things that I have completely forgotten about that are now I have a receipt for, and it's like, oh yeah, that's right. I can add this, I can add that. Now of course, Camari messed me up. Half that stuff is going away. But before, I still there are other things beyond just the job, just living with taxes that you can write off, that, my medical and dental and stuff for the kids and all of that stuff. I just make sure that I keep really good records like that.
Okay, so we're going to close this out, but we did have one more audience question for Camari. It's from Dolores Edwards. Which is better, an LLC or single member LLC, and can you explain the difference?
A single member LLC is a LLC. So LLCs are. So let me just back up. So because we've thrown that term around a lot, right? And I want everybody to understand why you should get one. So a LLC helps to protect your liability, helps to protect your personal assets from liabilities. Excuse me. So if Ernest writes some salacious takedown piece on some unknown celebrity, which he's known to do, right? They might try to sue him, right? So this protects him in lieu of, him writing that as Ernest Owens himself. So they sue the LLC. Sometimes it works. Sometimes it doesn't. What's predicating on really making it work, though, is you running that LLC like an actual business. Separate bank account, not co-mingling funds, keeping proper records, keeping proper documentation in terms of meetings. So a single member LLC is when you have one person, and Ernest already admitted it, so I'll pick on him a little bit. He is a single member LLC. You can have more than one member, right? And a member in an LLC just means one of the people that are part of ownership. Now, when you have multiple member LLCs, you get into a different bracket. So let's say me and Ernest decide to go into business. We create a media company together. We can still be an LLC, but we're now going to be treated as a partnership. So it's two of us. We have to do some different tax reporting. And there's some other things that go along with that. So a single member LLC and LLC are still the same thing, but sometimes they get treated a little bit differently. Also, I was trying to explain earlier too that LLCs are very popular right now, but an LLC isn't always the best thing to do. Sometimes it might make sense for you to be a corporation, especially, let's say you make good profit and you consistently make good profit. I believe Adrienne mentioned earlier that you have to pay your Social Security and Medicare taxes. If you take on other entities, you have a bit more flexibility to do that, and you're able to save some money. So don't get caught into the LLC. Just think about the entity part of it. You need a separate entity because you should have a reason and a strategy behind everything you do behind business. I hope I answered that question. If not, I'll be more than happy to go deeper.
I think you answered the question. Any parting words as we leave for the evening from anyone?
Yeah, I just want to add this important part, with the national organization, everything, we're in a different time as Black journalists. Every time I turn around, there's always layoffs. And it's always moments where there is this waiting period for those who are in between jobs, where you're waiting for that full-time job and you're just stuck in between freelance opportunities. I think now more than ever, especially for print journalists and digital journalists, and journalists of color, and even young people who are starting off with freelance, getting an LLC is in many ways can be a safe investment in your brand, and also a safe investment for your assets. Because let's say you get laid off, you go right into freelancing, your whole financial situation changes, where you can then write off things that you couldn't write before to support yourself. And so I just think for any journalist that's consistently writing and doing side work, it does not hurt to do it. Because I had a friend of mine who last year got laid off. They was out of work for about 6 months. During that time, they was on the job search. They need to, go to conferences. They was freelancing. They was doing all these different things to promote themselves. And the good thing is that they had an LLC on the side, and they was able this tax season to really write off a lot of things in that 6-month period. Now they're working a full-time job again, but they're still also doing other work so they can keep that LLC popping. So I just think anybody who is freelancing, doing some small work or doing anything, it's an investment in your tax situation, your financial situation, and just your future.
Ernest, that's a very good point. And Camari, maybe you could just tell people, maybe there's a really short list that if you are recently laid off, these are the things you should remember that you can now write off in your job search.
You know what? That's a great question. Before you could write off job search, I don't think you can write off job search anymore.
Oh,
that's good.
But
that is good to know. I mean, nothing. I mean, isn't there? You can't write off driving around. You can't write off the printing of the resumes or sending the resumes or something. Nothing.
I'm looking
He's
right
thinking.
now.
He's thinking. Okay. Okay.
The beauty of Google.
All right. Because there are people who, all the layoffs that we've had, and as broadcast freelancers, you could be working 3 days this month and not work for the next 3 months. And during that time, you're making phone calls.
Well, another thing another way you could reframe it, though, that I know strategy-wise, is that maybe instead of calling it job search, if there's a specific training. So if you're going to, like, for example, NABJ, rather than saying you're going to the career fair to find a job, maybe you're going to those workshops to get your training. And so trainings and things like that can be written off.
Can they still be written off, though?
As a business.
Trainings can.
Can they, Camari?
As a business, they can be written off.
Okay. Yeah. So if you have an LLC, you can write off the training, and you just would define it as training as opposed to job search?
Yeah, but again, I'm not trying to go against Ernest or anybody else. Sometimes when you have an LLC in certain states, you have to pay a minimum tax fee. Sometimes it's $300. I just want people to know that. So you don't have to be an LLC. So even if it's you solo before you started your LLC, like Ernest said, though, if you frame it the right way, it can be viewed as a business expense on your own.
Yeah, so I found ways personally to redefine exactly what I'm doing. Because, like, for example, NABJ convention, if you write, I was going to look for a job at the convention, you can't write it off. But if you say, I went there to get skill training and opportunity to flourish and promote my brand, then you can write it off. So really, it's a matter of semantics and how you frame it, because I've seen people in my circle who had things that I was like, why you didn't write that off? The way they wrote it and the way they described it and the way they explained it was what cut them back. So it's all about what you do. When I write NABJ convention off, I say it's for professional development and skill training. And that can be written off. But some people say, oh, I'm going to look for a job, or I'm there to socialize, and it was a vacation. And if you call it a vacation, you can't write it off. If you're calling it, and so certain people, I think I'm happy we're having this workshop, because we're giving people ways to figure out how they define these resources to them. Like the Millennial Media Summit, that's a professional development training for me, rather than, X, Y, and Z. So we have to think about ways that we look at these tools and these things, and that helps us if we have a business.
I mean, I think ultimately what you're really trying to say is everybody should see themselves as a business owner.
Okay.
And as you develop that mindset, because you can be a business owner and still have a 9-to-5. And as you develop that mindset, it'll help you going forward.
Okay, this is the last question for real. Y'all don't type no more. Have the question. AC Chu asked, she says her state, but she didn't say which state, requires LLCs to file an annual report every year and imposes a $300 fee. Is this fee among other states?
Mm.
Yeah, I want to say California, because I just said that, right? I think Californians is 1,000. Right. So everybody is case by case. Nobody is cookie cutter. And so I'm always super sensitive to that, because when people follow these quote unquote talking heads on TV and they do the stuff, they never know the ramifications and the actual backlash that might happen to them. And I'm the one that always has to fix it. So, I always say, if somebody would have talked to me, they wouldn't have went through all that. So yes, $300 is a very, very, very common number across the country.
Okay.
All right. Well, thank you all. Before people start flooding us again, thank you all so much. I learned a great deal. I'll probably still either go to April 15th to file. Yeah, that is April 15th this year the last day to file, or is it April 18th?
No, it's the 15th, but I would file sooner than later. But if you can't file, make sure you file an extension if you can't make it in by April 15th, because you will get assessed a non-filing fee.
Okay.
Okay.
It's not like I can't file. I'm just lazy and just keep doing it in October. I have no good reason. And it's not like it's got to be on, but okay. So, thank you, everybody.
Thank you.
Appreciate it.
That's great.
All right. Thanks. Bye-bye.
Thank you.
Bye-bye.
Bye.